You're listening to the Perth Property Show, Australia's only weekly property podcast by West Australian experts for West Australian listeners. Catch your latest episode every Monday at 7 a.m.
Good morning, everyone. Welcome to the Perth Property Show. My name's Trent Fleskens, your host as always. This week we've got one of the most respected minds in property in Western Australia, David Cresp from URBUS, back in the studio to have a chat about where we are at with our supply numbers from an apartment space and also from a Greenfield space. Dave, thanks for coming in again, mate.
No worries. Great to be here again. Thank you.
I remember a couple of years ago, we were having a conversation on this podcast about what was a fairly stark reality at the time, and that was that for us to get ourselves out of this undersupply situation, essentially prices have to rise simply to meet feasibilities for developments. And that was mainly pointed towards apartment building. And that was a pretty, as I said, stark reality for us to go. In order for supply to go up, we actually have to increase prices. You were pretty spot on at that point. Congratulations. Whether we're happy about it or not, that's been our journey in the last couple of years, hasn't it?
Absolutely. We've certainly seen the Perth house price obviously increase very significantly. Back when we were last talking, I think the Perth property median house price was more around the sort of $500,000. We're seeing that depending on whose numbers you take, but the latest from REWA is $830,000. If you take some of the other numbers, which are good leading indicators, then you're up more at $900,000 plus for some of them. So we're certainly racing towards a $1 million median house price. Now, that's a pretty big shock in a very short period of time in Perth, but when you have a look at where we sit with the rest of the country, a lot of that has been catch up. And a lot of that also is that we're in a housing market where there is more demand than the industry's got capacity to produce new housing. So that's pushing prices up significantly.
That's a really good way to explain it. It is true to say that our supply capacity is actually less than 10 years ago. That's actually quite deplorable as a state as to how we've allowed that to happen with regards to our trade base. And maybe it's simply that they'd rather work in the mines for more money in some situations. But the real reality is that the amount of demand we've got for housing, which is essentially just the amount of people who need it, who have come here and need a roof over their head, is unprecedented compared to what our system has been set up over decades to be able to withstand from a demand point of view and with regards to supplying for that demand. As you said, when we're in that inflationary environment where demand is continually pressuring supply, we know there's really only one way things go, and that's up for prices, as you've just explained. Some data houses are now suggesting that we have hit a median of $1 million for houses, not units, but houses. But it was certainly a conversation where I remember you were on a panel, it might have even been with me, I can't remember. It might have been a UDIA or a PCA event, and you were very specific at the time that apartments needed to rise in price off the plan by at least 20% to even make the building feasible. Now, I reckon that you wouldn't have even factored in how much construction costs would have risen at that point too, and I reckon that number has had to have been more than 20%. Would you agree?
Oh, absolutely. I don't think anyone would have guessed that construction prices, if you go back to pre-COVID times to now, construction prices are more than 50% up from where they were previously.
I reckon they're 80 when I do the numbers
absolutely.
On just single houses.
Yeah, absolutely. If you go back to that sort of pre-COVID period, then it's a massive jump, and would have anyone guessed after a period that, and it's easy to forget now that we saw almost 5 years of the softest economy that we've almost ever seen in Western Australia in the pre-COVID periods. Population growth was low, construction activity was low. We saw during that period almost no price increase in construction costs. It was a very competitive construction market and prices were not going up at all. So there was a lot of probably catch-up growth that had to happen. There was a lot of costs that builders just kept on absorbing, and builders really hadn't factored in, and no one had factored in that huge jump that was going to happen during COVID period. And that's continued after, because we just don't have enough labour in WA to be able to produce the amount of housing and as well as service other sectors that we're trying to do. So
are prices going to keep rising?
Yeah, house
their cost side?
Well, both on prices and costs, they're going to continue to rise. We're seeing a period of, it seems that the East Coast has suddenly found what a great state that we live in, and we're seeing interstate migration be incredibly strong. We're seeing sort of 10,000 people a year circa coming into Western Australia. And again, you go back to pre-COVID times where we got down to about 11,000 a year that we were losing. So suddenly the difference between that's 20,000. We're then seeing strong overseas migration as well, as a lot of people want to come to Western Australia. We've got jobs, we've got a terrific climate, we've got a terrific place to live nationally and internationally. People would love to be here if they can.
Yeah, so it puts a lot of pressure on the system. People are doing their best from a policy and also just an execution perspective to meet that. But the reality is we're back down at the lowest amount of stock on market ever. A year ago, we were rising back up to 5,500 properties, which is still a deplorable amount of properties on the market, a balanced market being 13,000. We have half that this week, and we transacted on more than a third of that last week. And it isn't something we should be excited about or proud about. Yes, it means prices rise. Yes, it means that our assets become more expensive, but so does everyone's. And really, it's just those who are not owning assets, the ones that are losing right now. The rest of us are still just riding the same wave as everyone else. But you make a good point. Compared to the rest of the country, we are not expensive. This isn't an affordability crisis, in my opinion, Dave. This is a mobility crisis. When you only have 2,700 and something properties on the market out of a population of 3 million people, and you're transacting on a third of that every week, it makes it very hard for the less competitive to actually move. And those are first home buyers moving into the market and downsizers moving out of the way, to be frank, as well into whether it's apartments or leaseholds, anything like that. And so that's our real problem. And it was important to get you in for an update, I think, as to how we're going supplying that problem from a new construction basis. We can talk to the stock on market. We know that's lower than it's ever been. But how we're going as an update on the supply of new construction, both apartments and Greenfield. And maybe we'll start with apartments. The only person that was building apartments was Paul Blackburn with One Subiaco in the Grove when we were speaking. There might have been a Finbar development going on. How's it looking now? Are we improving, Dave?
We've improved to a degree. We're seeing consistently 1,000 to 1,500 apartments completed in the larger end of town. What we track is apartments in buildings of 25 or more apartments.
Is that a year, a month, a quarter?
So a year, and that obviously is still a very low level.
A pathetic level, right? We need 10 times that, don't we?
About 10% of new dwellings are apartments. Yeah. If we have a look at where we probably should be, then we should be more like 30%. Sydney tends to be almost half of the stock comes from apartments, but Sydney's a very mature city and large city, so we're unlikely to get to there. But a level of 25-30% of new stock.
So 3 times what we're doing right now is what we probably should be aiming for.
Yeah, absolutely.
And what are those apartment buildings that are going up right now that we might want to see on the skyline if we could? Any examples for us that we might recognise?
Yeah, look, we're starting to see an apartment market starting to spread out again. We saw it get very tight, and for a little while there, if you didn't see water, then you probably weren't going to make the apartment stack up. We're starting to see a few more areas that are starting to see new apartment supply happening. So areas like Subiaco, the Oval, in pre-sales at the moment.
Orchard Terrace?
Yep, Orchard Terrace just coming to completion. There's some developments in Maylands trying to get the pre-sales to get out the ground, and hopefully that will be happening next year. So we're starting to see a few areas that are not the absolute premium. It's really great to see a more diverse apartment market. We're still seeing some amazing top-end product getting out of the ground and coming to completion, and Riviere coming to completion, and the first 2 towers there are pretty amazing results there. We've seen product in Sorrento, in North Fremantle coming to completion. So seeing some really great top-end product that really is providing something very premium for the downsizing baby boomers. But we're also seeing more of that middle-end product. We're seeing Rivervale apartments and
Bel Air from Finbar.
Yeah, Bel Air,
Belmont, essentially.
Yep, and their Rivervale one more recently got some really good traction in the market, and really showed that when you're able to produce a product at a mid sort of range price point, then there's certainly a market there. And as you say, there are so few established houses on the market that people really are turning towards new product, and whether that's apartments, if you want something more inner, then the apartments are now starting to actually look pretty good value. When you look at the average apartment price is $1.1 million.
What are you getting for that?
For that, you're getting a 2-bedroom apartment. But
that's crazy, isn't it? You wouldn't buy a 2-bedroom house in most suburbs for $1.1 million, would you?
No, but when you have a look at the sort of locations these apartments are at and the type of amenity that they're providing, it's not all just about being inside your own home. It's about enjoying the amenity that's outside the building, as well as often very high amenity levels that are within the building. So yes, you're not getting the big house, but you're also not having to look after the pool or the gym or all those other type of things that you might have in your own house, and you're having to go a hell of a lot fewer trips to Bunnings.
It's a big sell, but I don't think it's the demand side that is holding it up, is it? It's still the supply side. It's still the developer making the numbers work with bank finance and then trying to get a builder to build it. How are we going with availability of builders in the apartment space? Because I couldn't count 5 off the top of my head at the moment that are getting it done.
Yeah,
that are self-fulfilling.
Yeah. There's certainly still a real lack of builders, and it's not just the lack of builders, it's the lack of subcontractors below that is the real challenge. So that's still a really big issue in this state. We are starting to see some new builders step up and start to play in that Tier 2 and Tier 3 space of builders. So being able to
Atlas, Thomas.
So yeah, there's a few new ones that are stepping up into that sort of space and starting to take on larger buildings. So where there's demand, then the market will over time accommodate that. But yes, it's still a real challenge to be able to secure the building, lock in a price and get a project underway is still really challenging. And as you say, at the moment, it's not so much the demand side of things that is the challenge. The demand is there if you've got the right product at the right price. There are certainly people looking for apartments. As we say, the established market, good luck trying to find something there, really challenging market. So people are certainly looking for alternatives in terms of new product and often prepared to pre-commit off the plan, or there's some still product getting to completion that they've still got some apartments left in. We're also seeing the Greenfield land market and livable communities go incredibly strongly. The most recent UDIA numbers showed that was the strongest quarter ever for land sales in one quarter.
What's a strong quarter in Western Australia for land sales?
So 3,600 land sales in the September quarter.
About just over 1,000 apartments in a year.
Yeah.
And we've just done 3,000 land sales in a quarter.
Yeah, absolutely.
So that shows the stark difference, doesn't it?
Yeah, it does. Yeah.
Is that because, again, land is just the path of least resistance to get off the ground and get selling, but also it's a market that people understand and prefer more still?
Yeah, look, I think in WA there's still a lot of people that would rather live in a house than an apartment. Whilst there is really good demand from people like downsizers and first home buyers who want to live in a more inner central location, there's still plenty of people in Perth that's not for them, and they still want the block of land and swimming pool out the back if they can fit it on a new block these days. But yeah, I think the trick to maintaining prices and not having prices go up as strongly as we've seen over the last couple of years, which, as you say, is a real challenge for many for affordability, then is to have more housing supply. And whether that's apartments, townhouses or land, it's just a matter of making sure that we can produce as much supply as the market is taking on. At the moment, that's pretty challenging. So,
all supply is good supply. Is that the mantra?
Absolutely.
You mentioned livable communities. Can we have a chat quickly about the alternative downsizer option to apartments being the leaseholds, being the lifestyle villages? Do you track a bit of that at AUKUS?
Yeah, absolutely.
What's going on there? Is that the new frontier for downsizers to start accepting that model as an option?
Look, land lease communities is something that's been around for quite a while in Western Australia. National lifestyle villages have been here for quite a while.
John Wood
has been a real setter of trends in that market and really pushed that at a fairly early stage in that industry.
And standards as well. I think they are the leaders in that. Providence these days, obviously. They really are the leaders in the standard of what the market expects a lifestyle village to be these days in Perth.
Yeah, and certainly providing that huge level of amenity they've been really great at. We're now seeing new entrants come into that market, and some of the national players are really starting to move on the Perth market. And nationally, we're seeing a lot of movement in the land lease community space. And you're also starting to see a new generation, a new style of housing in that, whereas traditionally it's been modular housing in that market.
Park home feel, yeah.
Yeah, I mean, John Wood would certainly argue against that it's a park home feel, but they have been modular housing. It's been pretty good quality of modular housing, and nothing wrong with modular housing. It can be really high quality and have really good acoustic and thermal properties and things like that. So I think it's still been a very high level of housing produced. But you're also starting to see more built on-site houses and different types of products. So I think what's the really great thing about that market is that you're starting to see a big diversity in what the sort of product offering is and more options. And certainly it does provide a really great option for people to lease a whole lot of equity that they've got in their own home and move to a lease model. And often they're able to get some good government incentives out of that. And
no stamp duty?
No stamp duty, which is a big one. And stamp duty really is a big tax on mobility. And it's, as we see the median house prices push up to $1 million, then for many people that's a really big detractor on actually moving to the right type of housing, right sizing, right location. That huge cost of in between an agent's fee and a stamp duty, you're looking at a big cost for moving these days. And that's part of the reason I think you're seeing a lot less houses on the market. People are just choosing to stay in their own home. You're seeing a lot of more renovations in this market. That big cost to be able to actually relocate is a major barrier for people.
With the greatest respect, people would prefer to own their own land in Perth, right? They prefer to have the upside. And I think that lifestyle village or the land lease community is really about recognising that maybe when we're downsizing, we either want to take some cash out of it and not have to pay for the land up front, and certainly the stamp duty as well. But also we may just not be able to afford to downsize in the way that we hoped these days because of prices as well. It feels 6-7 years ago that same unit we might be downsizing to or smaller house, it would have been $500,000 and not $900,000 or $1 million now. For me, it certainly looks like one of the more viable options these days for downsizers that they may not have had to have considered pre-COVID. Does that make sense?
I think it's been there as an option for people. It's about providing housing diversity. It's about providing options for people. And it's a great opportunity for some people to unlock equity and be able to move into something that's still really high amenity, like-minded people that they can be there with, and a real sense of community. So I think
it's a big benefit of community, isn't it?
Yeah, absolutely. It's that amenity and it's the sense of community that type of offering has. Generally, they're over 55s villages, so it's a different form of retirement villages. We've had retirement villages around for a long time, and we're still seeing retirement villages be a popular option, but land lease communities are providing a different option for people to be able to downsize and move and have a community, particularly at that age. Often when you're entering a phase of your lifestyle that maybe you're becoming single because a partner's passed away, then having those options for having that sense of community and a place that you can feel at home and be able to make new friends can be really important for people.
That's the basic need, really. You have the food, water, shelter, and at that age, community especially. Let's look forward, if we can, into 2026. What does the landscape look like in your perspective? If we're talking again this time next year, what will the overview have been for 2026 with regards to the Perth market? And let's maybe start on the stock on market. Do you see, and it's hard to not because you have to be optimistic about it, and it's hard to continually believe that it could get worse than this in terms of stock and supply. Do you see improvement? Is there a way for us to move in the right direction? A year ago, we were all saying, yeah, it's got to get better than this, and it went backwards. This is worse than it was last year, and I actually think we're so stunned, people aren't tired from it, people aren't even really noticing. We have half the properties on the market right now than we did a year ago, and we thought that was bad. Where does it go from here on the structural side, Dave? Where are the green shoots to make it better if it is going to get better?
I think you're absolutely right. It's got to get better because we're at a pretty low point in the number of properties on the market. It's got to get better from here. We are producing a reasonable amount of supply. We saw a big hang-up during that COVID period of how long it was taking to get a house completed, and in some really bad cases, people were saying it could have taken 3 years to get a house completed. That big bottleneck is over. The builders are very careful about how much stock they're taking on, and we're now seeing that the average house is taking 11 months to get completed. So we are bringing new stock on from the apartment market, from the land market. There is new supply coming. Is it enough? No, it's not enough. It should be more, but the industry is doing everything they can to try and get more and trying to be able to gear up. We'll see the highest number of dwelling completions that we've seen for a number of years this year. So
what will that be?
So for the 12 months to June 2025, we saw 22,500 dwellings completed, and that's the biggest number that we've seen since 2017. So we've certainly seen a good number of dwellings that are coming to the market, and so the industry is really pushing to try and see that continue to increase. But we are facing challenges. Labour is tight, the availability of land is tight, the availability of builders for apartments is tight. So it's a pretty challenging market to be able to produce more than that, but that's not a bad number. Yes, it should be more. So supply is coming through. In terms of where do we see next year going, we hoped that this year would calm down, and the first half of this year certainly did, after seeing median house prices grow at over 20% last year. The first half this year, and particularly quarter one, did see the market stabilise and come back a little bit.
That was stasis from an election period and interest rates, wasn't it?
Yeah, it was before the interest
tariffs.
rate. Yeah, it was uncertainty about global climate, a bit of uncertainty about the Perth market. As you say, there was elections in the air, which always slows things down a little bit. Then we saw the interest rates decrease and things really took off again, and we're back to where we probably didn't really expect it to be, in one of the hottest markets that we've seen after a year of 20% median house price growth. So next year we'd certainly hope that we do see the market calm down. It would be good to see prices are still going to go up. I can't see prices coming back in this environment by any means, but it would be nice to see if prices can be growing at the 5 to 7%, not the 10% plus that we're seeing at the moment. Because as you say, we're in a market, we have seen the catch-up growth. Everything that we continue to do at the moment in terms of median house price growth is really damaging to affordability and really damaging to first home buyers being able to get into the market. So we really do need to try and see a bit more balanced market, and we think we will start to see that come through a little bit next year, albeit that there's still a lot of pressure there, and we're still in a really strong economy. We've got mining sector going strongly at the moment. We've seen a lot of money on energy transformation. We're gearing up for a lot of money being spent on the AUKUS and defence spending. So there's still a lot of drivers in the WA economy that will continue to see it be a pretty hot market over the course of next year.
You make a good point on AUKUS. AUKUS, I think, is a curveball, a bit of a chaos factor that we've never experienced, and therefore none of us, even those who would consider themselves experts, could really quantify. We're talking about putting in the equivalent of an oil and gas Chevron project or two in the backyard of what was pretty much the lowest socioeconomic, lowest socio-demographic LGA in Perth, the city of Kwinana. And that's already, just from expectations, I believe, having massive impacts on where prices are going. You could buy a house in Medina, Leda, Aurelia for $300,000 max pre-COVID on a full 900 square metre block. You're looking at prices now $700,000-$800,000 at least. I wouldn't be surprised if we see them in the millions, not because their amenity increased in many ways at all, but because the demand factor will be hyper-focused around the city of Kwinana, city of Rockingham, because of AUKUS and the expectation of that over the next decade or so. That is going to change the face of the finances of that part of Perth, isn't it?
Absolutely. When you have a look at everything that's happening in that part of Perth, Rockingham's always been a beautiful beachside suburb, but it's been a little bit of a sleepy suburb. It's had a bit of a bogan influence there. That area is going to really change over the next 5 and 10 years. You're seeing a port being built that will firm up over the next 5-10 years about the port. That's going to be a major employment source. AUKUS is going to be a very major employment source, and there'll be some pretty highly skilled, highly paid people that are going to be involved in that, as well as a lot of defence people in that area. So the nature of Rockingham really is going to change pretty significantly. And yes, that's going to push house prices up. And you've got an area that is now serviced by retail, well serviced by public transport, close to the coast. What it hasn't had traditionally is that big jobs driver there, but that's now there, and certainly totally agree. That area is going to substantially change the face.
I think we underestimate that as a society at the moment. I don't think we understand what that will be, and I think it will be massive. And it's those people getting in early in that southwest that otherwise would have been seen as a fairly risky market to park your money. I think that will benefit industrial, commercial and residential alike. This is huge money going into that area because of huge demand as well, both from business and personnel situation. Yep. It is funny, isn't it, how 22,000 new starts is not enough. As you said, in 2017, if you look back in 2017, that was an oversupply at the time when we had negative growth interstate migration, leading to the worst and longest protracted downswing in Perth's property market over that time. But now we look at it in 2025 and go, 22,000 is not even nearly enough. It's 50% less than what it probably needs to be this year, let alone the deficits the years before. And that just shows it's not so much the supply side not pulling their weight, but it's the massive impact on the demand side that we've never been geared up for in the first place, isn't it?
Yeah, absolutely. The highest we've ever got to was 32,000 housing completions in March 2016 for the 12 months to that period. So we're now getting 22,000 completions per annum, so it's a long way from where we got to back in 2016.
Off a base that was even lower than that, right?
Yeah, absolutely. But yeah, now we've seen that period pre-COVID where we lost a lot of trades. You're right, that sort of 32,000 did lead to a bit of a glut in the market and was unfortunately right at the start of the economic downturn in the state. We saw 5 very soft years of economic growth and low population growth, and also very stable housing prices and decline in housing prices, and 5 years where we actually saw housing prices drift slowly backwards from median house prices in the mid 500s back to mid 400,000s. And who would think now it seems a long way away that we could be talking about a median house price and being able to buy a house in Perth at $450,000.
Maybe the land, if you're lucky.
Exactly.
Hey, Dave, thanks so much for coming in. Have a great Christmas. Appreciate the insights, having a look at what this year looked like from a supply side, where it's come from and where it's coming from next year. And I'm sure we'll have a chat, hopefully next year, to have a bit of an update again on how well we did on that scorecard.
Thanks. Really enjoy coming in and having a chat with you, and really enjoy listening to your podcasts and great service that you're providing to Perth. So bring on next year and let's see what happens then.
Cheers,
Thank
mate.
you.
Thank you for listening to another episode of the Perth Property Show. If you've only just joined the conversation, you can catch up by heading over to our website, perthpropertyshow.com.au, subscribing to the podcast, or joining our Facebook page. Don't forget to tune in next Monday at 7 a.m. for more expert insights, local analysis, and suburb spotlights. Happy hunting!